All right, 5, 4, 3, 2. We're here today on another edition of the Mobile Mailbox Money Vlog here at Arizona Real Estate Investors Association Phoenix Real Estate Meetup, located at venue 8600. Here with Nate Hare from Directed IRA. Nate, appreciate having you on the channel today. We're just talking about the Alt Summit coming up here on Thursday and Friday, hosted by Directed IRA. You know, alternative investments are now being entertained more than ever. For the investors that are kind of looking for that alternative, you know, what would you do to have them explore different strategies, you know, or possibly feel some type of hesitation?
Yeah.
You know, what would you have to say about that?
Well, I'll just say this. For anybody that has a retirement account, and I'm talking to about 70% of you watching this, whether you have a 401k, an IRA, some old employer plan, just realize you do not have to just invest those dollars into stocks and bonds. If you don't understand those investments, don't invest in those investments. The company that I represent, Directed IRA, we allow people to use their retirement plans to invest in alternative assets, things like real estate, rental properties, land, multifamily syndication, notes secured by property, which is actually what I've been doing with my retirement plans for the last decade. You'd be shocked to know that the more alternative assets someone has in their retirement plan, the higher the value of their retirement plan. These are directly from audits from the IRS. The average person who has a retirement plan only has about 5% of their assets in alts. It's just because they don't know that they can own them. But when you get to the higher level, high net worth people that are worth $1 billion or more, 22% of their assets are alts. And then when you go ultra wealthy, $30 million net income or more, 50% of their assets are alternative assets. The rich and the wealthy have understood that alternative assets sometimes perform a lot better than the stock market. You just didn't know that you can do it because Fidelity will never tell you about it. So long story short, if you have a retirement plan, you can invest in almost anything in the planet. And to me, there's nothing better in a retirement plan that pays no taxes than investing in appreciating or cash flowing assets like real estate or notes.
Boom, just dropped a bomb there. You know, I think 9 times out of 10, the lower net worth individuals just don't end up getting shopped these opportunities. And they may feel some type of hesitation because of lack of education. Because once you get education, you get your due diligence check boxes, and that provides comfortability at the end of the day.
Yeah.
We've explored notes. We provide notes out in the market. For an IRA investor, what are kind of some common questions or misconceptions that people have when they come to open an account with Directed IRA for the custodianship of that asset? What are some common FAQs?
Yeah, I would say there's two misconceptions about what we do. A lot of people think, even advisors think, that when we buy real estate with our retirement funds, we have to take the money out of our retirement. So a lot of people think, well, I don't want to pay taxes and penalties to take it out to buy real estate. That's not what we do at Directed IRA. We just exchange your IRA asset of cash for asset of real estate. We buy the real estate. We don't give you a distribution. So that's misconception 1. Misconception 2 is that you need lots of money to invest in real estate. You don't. I have a client that took a $10,000 Roth IRA and turned it into $300,000 in 16 months on one real estate deal. I have another client that took a $70,000 old employer plan, old 401k, converted it to a self-directed Roth, and that $70,000 that he invested back in 2012 is now worth $4 million in a self-directed Roth IRA because he owns 5 rentals that have appreciated and the renters have paid off the notes. So, you know, the other thing is just getting the education on how it works.
Absolutely.
We put on great events like our Alternative Asset Investor Summit, which is coming up this Thursday and Friday. We do it once a year. This is an event where we have 300 to 400 most of our clients, and they come out to just learn and, more importantly, network. Because one of the things that makes you a really good self-directed IRA investor is not understanding what you can invest in. It's knowing who you can invest with. It's having key relationships or financial friends that can actually utilize the experience. You can leverage their experience and just put your IRA to work through the sweat equity of other investment professionals. You don't have to do the legwork. You just have to know the people that are experienced in the market you want to invest in. So I would say check out directedira.com. You can listen to our webinars. You can register for our live webinars. You can attend our events. We still do have virtual tickets available. We're sold out on live tickets. But if you really want to come live, we're going to have it up again next year. But The first investment you make is through education. Get familiar with it, or just contact us at Directed IRA. We'll give you a free consultation.
Get familiar, get out a network, find qualified operators, get your due diligence check boxes and start cash flowing in as little as a 30-day program, tax-free or tax-deferred. And when you really start to understand that on a high yield note position, you're making that much more because you're not paying the taxes on it, at the end of the day. So really life-changing stuff.
Well, if you think about it, here's the reason why I like notes. Because it's a paper asset, but it's a paper asset that's tied to a tangible investment. Real estate, mobile homes, whatever the case may be. But you get a return on your money secured by something that's collateralized. You don't get that in the stock market. You don't get collateral when you buy Walmart stock. If Walmart goes out of business, you lose all your money. If I lend money out of my retirement plan and the borrower doesn't pay, I just get the property. So I get to sleep at night. And the other thing is that you're investing in assets where people have tenants, you have a vested interest to pay. I mean, real estate's the largest segment of our economy. If you're not invested into some piece of real estate, you're missing out on the boat, I would say. But real estate's tangible. There's cash flow opportunities. There's people that have vested interest to pay. And it's a market that's not going anywhere as long as human beings are on this planet. So my question is, why aren't you investing in real estate with your retirement plan, either passively or actively?
I heard a cool fact the other day about private lending being one of the oldest ways in business, it really in the world, so tried and true practices, get familiar, view the workshops online from Directed IRA, diversify. No one's saying take all of your capital and put it into one program. You got to leverage different asset classes at the end of the day. So again, that's Nate Hare here with Directed IRA at the Arizona Real Estate Investors Association, brought to you by Silvercrest Opportunity Fund. Earn a 10% net return for a 1-year term, 12% net for 3, or 14% for a 5-year term in the bank's position, cash flowing in as little as a 30-day program here with Mobile Mailbox Money.
Hey, do it. And if you're going to make those returns, might as well do it tax-free in your retirement plan.
Bam, bam, bam.